In today's video, I want to chat to you guys about the 2023 income tax filing season. Good day, my name is Heinrich Geweer. I'm the owner of SA Accounting Network and I've been in the accounting industry since 2008 and I've also been filing tax returns since 2008. In today's video, I want to chat to you guys quickly about the auto assessments this year. There's one or two small changes that the receiver of revenue made that I want to inform you guys about. Just before I get onto the presentation, remember once again just to like the video, remember to subscribe to my channel as well so you can see more of this type of content, just tax related matters for your business. And also if you're looking for a tax practitioner to help you with your tax returns, remember to go check out our website saaccountingnetwork.co.za. We've got a list of many different accountants listed on that website who will gladly assist you with your tax returns. So let me jump down to my computer, then I want to show you what changed this year in terms of auto assessments and what you can expect in the 2023 income tax filing season. Great. So what I want to discuss today quickly is obviously the 2023 income tax filing season and just a couple of pointers of what you need to know and just a couple of things that changed. So I think the first thing, let me just get my slides to work over here. Come on, slides. There we go. So first thing, dates. Non-provisional taxpayers, they say the 7th of July 2023 until 8 o'clock, the 23rd of October 2023. And the reason why I made that little 8 o'clock red, that is something new that they changed this year. Previous years, you had until midnight to file your tax returns. So obviously, somebody over there doesn't want to work overtime, or maybe they want to give their computers a break or something like that. So for some reason, they made it 8 o'clock on the 23rd of October. So no late filing of returns that day. That's really important for provisional taxpayers. So that will be the 7th of July once again until the 8 o'clock on the 24th of January 2024. And remember, income tax relates to companies as well. So companies, the filing season normally opens up on the 1st of August. They normally don't give a specific date. We just lock in the day and say, okay, we can file the returns and we can start doing it. And we assume that it's also going to be until 8 o'clock on the 29th of February 2024. So I think that is the first change. And I think something else that also changed, we're going to look at it now, as just the dates. But let's quickly jump down to auto assessments. I've done a video on this topic before, so you can go check it out as well on my YouTube channel. And just to get the background of where this whole auto assessment thing came from. First thing, the SARS issues an assessment from information that they have. The information comes from third-party data submissions. We're going to dive a little bit into the third-party data submissions. And that's the reason why I made those three words red is really, really important. We're going to look at that just now as well. And last year, SARS issued auto assessments before the filing season actually opened. So that is also really important to know because there's a small change that happened with this year's tax returns. Let's quickly see what is new. So this is something new and I'm quite interested to see how this is going to work, where SARS is going to notify taxpayers of auto assessments. So in the previous years, what happened is you just got a letter from the receiver of revenue saying that you've been auto assessed. Here's the assessment, and then it was also actually a couple of days before the filing season itself opened. So you would get your refund and get your assessment and stuff, and then only a few days later they actually open up the assessments for us to be able to see what's happening on the assessment or to be able to file corrections and stuff like that. So this is something new. I think it can work, and I think what's important over there is that if you look at the dates, remember last year we had from the 1st of July to start filing the returns. So now you can see that SARS will issue these letters stating that you were selected for auto assessments before doing the auto assessments. From the 1st until the 6th of July, they will be issuing those letters. And from the 7th of July, from what we can understand from the research that we've done, from the 7th of July, they're going to start issuing those assessments. And the issuing of letters by SARS would provide taxpayers an early opportunity to examine if they were incorrectly subjected to auto assessments, also for them to review the accuracy of the auto assessment. So I think that's also really important because last year there was a lot of issues with this where SARS issued auto assessments to people that weren't allowed or didn't qualify for auto assessments, and that caused a lot of problems. I'm going to show you guys something now in connection with dates, how much time they've got to correct those assessments if there's something wrong with it, and that is where there was a little bit of problems last year with these auto assessment systems. So I think them issuing letters, I think is really, really important, and I think for you as taxpayers itself, my recommendation here is just log into e-filing and make sure that your contact details are correct, because if SARS has got the wrong email address or wrong cell phone number or something like that, you're never going to get the letters and you're never going to get your assessments, and that was a challenge that we had last year. I think what's new as well is administrative dates, so the amendments. So if you receive your auto assessment from the receiver of revenue and you're happy with the way that it is, then you can just leave it like that. We'll talk about that just now. But if there's a problem, last year we only had 40 days to find a correction, and that was a little bit of an issue because 40 days from the 1st of July puts you like into the middle of August. And a lot of guys, the last thing that they were thinking about was their tax returns in the middle of August. So this is quite nice because obviously SARS also does a drive in the media and stuff to let the people know, listen, 23 October, it's time to start filing your return. Now, if SARS issued you with the auto assessment on the 1st of July, then that 40 days elapsed a long time ago, and then you sit with a problem because then you can't file corrections because they would make that return final. So this is something that is really, really cool that they're going to give us until, once again, 8 o'clock, the 23rd of October 2023, to make corrections or file amendments on that return. So this is really good news. Tax practitioners will sigh some relief as well with me because that 40 days was really challenging last year. Let's quickly see what to do if you received an auto assessment. That's also important to know. If you use a tax practitioner, ask your tax practitioner to review your assessment as soon as possible. The problem is if you leave these type of things, then all of a sudden it's the 23rd of October, you wake up, you hear in the news somewhere the filing season is closing today, and then you will start getting your data and stuff together, then it's too late. So make sure that if you do receive an auto assessment, if you're working with a tax practitioner, pop the guy an email, say, listen dude, just have a quick look at my tax return, make sure that your assessment is accurate. If you don't use a tax practitioner, then obviously you have to log into your SARS e-filing profile yourself and ensure that they issued the auto assessment with the correct information. And then if they're happy with that, obviously if SARS issues the auto assessment, in theory, the money should be paid within 72 hours. So that is another thing that's really, really important that you need to sort out now before the filing season's opened is log into e-filing, go check and make sure that your banking details are correct. If you change your banking details, you need to make an appointment with the receiver of revenue to update your bank details before the filing season opens. Otherwise, they're going to be paying your money into the wrong account or into an account that doesn't exist. If you go check out the SARS website, if you just go Google there and say update my bank details, they will give you step-by-step instructions on how to do it. I've actually done a video as well. I'll share the description or the link to the video in the description of this video as well, where you can go see how you can update your bank details by making an appointment with the receiver of revenue. So please remember, if you do change your bank details, update it as soon as possible with the receiver of revenue. Otherwise, you might not end up getting your refund from the receiver of revenue. What can go wrong? So last year we saw with auto assessment that we had a couple of cases where there was a little bit of weird stuff happening. The first thing is if they received the wrong, incorrect third-party data, let's say for instance your employer made a mistake on your IP5, then they're going to assess you based on the wrong information that they have. So let's say for instance they add a digit in front of your income. So if your income is, let's say for instance, 200,000 Rand for the year, and they add another zero in there, then all of a sudden it shows that the income is 2 million Rand for the year. Or, 2 million Rand instead of 200,000 Rand, then you're going to sit with a huge tax bill. So that is something that can go wrong. We did see it last year with a couple of our clients where there was errors in IP5s. Next bullet point over there, home office expenses. We're going to talk a little bit further about third-party data submissions just now. They obviously only have information on their system that was sent to the receiver of revenue. So if you've got information on your side that the receiver of revenue doesn't know, you need to inform them about that. And one thing is home office expenses. So if you are claiming home office expenses, make sure that you find your amendment so you can get those expenses in. Logbooks and travel claims. So remember that during the year, if you receive a travel allowance from your employer, only 80% of that allowance gets taxed. There's a 20% portion that do not get taxed. So if you don't submit a logbook, then that 20% portion, you're going to have to pay the tax on the 20% portion. Obviously, you're going to be not going to be able to put your claim in. So make sure logbooks and travel claims is something that the receiver of revenue don't know. You need to inform them of what happened with the travel claims. So that's really important as well. And the next bullet point over there, I said medical expenses not submitted to medical aids. So remember, we're going to talk a little bit about third-party data submissions now, but the medical aid sends information through to the receiver of revenue, and that thing says what your contributions was to the medical aid throughout the year, how many people were on the medical aid, and obviously what expenses wasn't paid by the medical aid. But if, let's say for instance, you know your medical aid is depleted and you've got no more savings in your medical aid and you have to go for some procedure and you maybe have to pay 10 or 20,000 rand of your own pocket, but you don't send that information through to the medical aid, they're not going to put it on your certificate. So that information you have to manually put it onto your tax return, otherwise you're going to lose your tax credit on those medical expenses. So that is something that we also saw a couple of times last year. So just my advice is, if you do have medical expenses, make sure you send everything through to your medical aid, even if you know they're not going to pay it, because then they will add those medical expenses to the tax certificate that they issue to the receiver of revenue. It just simplifies the whole system. So that is really important that you must do that. Let's quickly see. Let's have a look at who sends third-party data submissions to SARS. So there's a long list on the medical aid, on the receiver of revenues website. So the institutions that supply information to the receiver of revenues is attorneys, banks, companies listed on the JSE, cooperatives, cooperative banks, estate agents, financial institutions, medical schemes, organs of state that issue bonds, post banks, state-owned companies, any person who pays an amount of interest to or for the benefit of a foreign person, SA resident companies, reporting institutions described in the FATCA agreement. So this is really, really important. And I'm going to show you why that is really, really important. So I think before I go to the next slide, what's really important to be as attorneys, you must take note that all attorneys must report to the receiver of revenue what's happening inside their accounts. So you can see over there, say on behalf of a third party, any amount in respect of an investment, interest or rental property as per the Government Gazette. Companies listed on JSE is important. Estate agents even have to report through to the receiver of revenue what's happening with the people that they're dealing with, and then financial institutions. And why that is important, if SARS issues you with your auto-assessment, on that auto-assessment, there's a very basic calculation that they do. They take your RP5, they add your medical expenses, retirement annuities, all the basic stuff is on that return. But there's a couple of things that the receiver of revenue receives on their side that is not auto-assessed, or it's not pre-populated on your return. It is your responsibility to make sure that you capture that information. If you don't do that, you can get into big trouble, because although they do the return on your behalf, they're still going to keep you responsible for what they have on your side, or the information they have about you that you did not declare in your return. So this is why I say this is really, really important. So what SARS knows about you, which you might think they don't know about you. The first thing is rented income. So remember that I said just now that estate agents and attorneys need to declare to the receiver of revenue what rented income they receive. So if you receive your auto-assessment and you just ignore the rental income section completely on your return and just don't submit that, then the chances are, because remember, they received information from your estate agent to say that you received, let's say for instance, 120,000 rands worth of income on your rental property. So under normal circumstances, we will take the 120,000 rand income, we'll put through all the expenses. If you had to pay electricity and your rates and taxes and your interest and your bond and stuff, then the taxable portion might only be 20,000 rand if you had, let's say for instance, 100,000 rands worth of expenses. So, but now, if you don't declare that thing and SARS picks this thing up, they're just going to give you an assessment. Say, listen, dude, you received 120,000 rands worth of rental income. You didn't declare it on your tax return. Please pay the tax on 120,000 rand, plus possibly at some stage they're going to start hitting you with penalties and interest as well, because you did not declare that. So they're actually trying to trick the people, because they know what you received, even though, so they're basically just testing you to see whether you're going to declare it on your return. If you don't, they're going to hit you with penalties. I always make the joke, I see the receiver of revenue is almost becoming like the mafia. They know exactly what's happening in every person's bank account. Second thing, capital gains transactions, properties and shares. Remember that list that we went through? Estate agents no, lawyers have to report through to the receiver of revenue. And when would you work with lawyers with properties? It's normally if you buy or if you sell a property. So if you sell a property and you don't declare the sale of that property on your tax return, they obviously receive the information from the lawyers, so they can see if you sold the property, and they know whether there must be rental capital gains transactions involved there. So that's really, really important. If you do sell properties, you must make sure that you declare it on your tax return. It's really, really important. Shares, I think, is also such an important thing. Remember, where they talked about financial institutions. So the financial institutions by default will send information like your dividends and the interest and that type of stuff. But something that they send through to the receiver of revenue, but it doesn't get pre-populated on your return, is capital gains transactions. So if you, let's say, for instance, you inherited shares, 400,000 rands worth of shares 10 years ago, and now I decide to sell it for R1,000,000. Remember, then you made a profit of 600,000 rand on the sale of that shares, and a certain portion of that was going to become taxable because it's a capital gains transaction. So SARS knows about that. Remember, those financial institutions send the information through to the receiver of revenue. So once again, the test is on you, whether you're going to be declaring it on your return. If you don't declare it, SARS picks it up, then they're going to slap you with penalties and interest because you did not declare that. And remember, they're going to issue with an auto assessment. You're going to think everything is honky-dory and everything is fine. So the test is once again on you to make sure that you declare those things. Crypto income. This has been a really hot topic when it comes to personal tax returns. Remember, financial institutions and that one with that funny name, all these guys report through to the receiver of revenue to let them know what happened in terms of crypto income as well. Foreign income. Remember, we live these days in the global village. South Africa is not an isolated country anymore. There's all these agreements where countries exchange data with each other, so they know exactly how much interest you've been receiving, earning overseas, or even if you're working overseas. Remember, all those amounts you have to declare on your tax returns. Remember, SARS knows about that. The next bullet point is really, really important as well. How much money went through your account? And I made this little thing over there that says sole proprietors. So banks need to report through to the receiver of revenue every 6 months to let them know how much money went through your account. So if you have a bank account, and let's say, for instance, there's R1,000,000 that goes through your account throughout the year, but now the receiver of revenue gets your assessment from or your RP5 from your employer, and it says that you only received 200,000 rand as an employment income, but the report from the bank says R1,000,000. So now there's a difference of 800,000 rand. The chances are Sasha's going to start asking questions and say, listen, why did you not declare all the income? We've had cases in the past where Sasha says, okay, we've picked up a discrepancy, please send us the bank statements for the past 12 months, and for every deposit that came into your account, please explain to us what the deposit was for. And sometimes that stuff happens with inheritances and stuff like that as well. So even inheritances, there's a place on your return, we need to declare those type of amounts to prevent these type of things to happen. And I think the reason as well, where I say sole proprietors, this is also really, really important. If you don't submit your return as a sole proprietor, SARS knows how much money went through your account. Let's say, for instance, what was R1,000,000, they're going to give you an assessment. They're going to say that it's all R1,000,000 through your bank account, and R1,000,000 is going to become taxable. You're going to have to pay the tax on that amount. If you finally return as a sole proprietor, remember, you need to declare your income plus all your expenses. Only after all the expenses, the amount that is left over is the amount that you're going to get taxed on. So now you're standing the risk of SARS disallowing all of your expenses. We had it the past year, actually the past couple of years, where SARS has just become silly in certain circumstances, where they issue assessment where they disallow all the expenses, and then it's for you, the sole proprietor, to prove that all those expenses were in the production of income. We had a case recently where we had to submit 1,000 slips to the receiver of revenue to prove expenses, because SARS just says, sorry, they're not going to accept the expenses. You need to prove that you did incur those expenses and that those expenses were incurred in the production of income. So this is really, really important. If you guys working for yourself, who's trading as sole proprietors, you must make sure that you submit your returns correctly. Go right. I think, let's on a lighter note, what can you do? First thing is to make sure that your return is as accurate as possible. Remember that list that I went through with you guys. Make sure you've got your rented income, your capital gain transactions, your share transactions. You declared your inheritances and stuff on your returns, so that the chances that they pick up something funny is as little as possible. Second thing over there is get a tax practitioner to review your return. I would recommend that. It's always nice just to have somebody in your corner, just to make sure that if something goes wrong, that they have your backing as well. Make sure that you get your data ready as soon as possible. When it comes to rental properties, logbooks, medical expenses and stuff, The sooner you can get this stuff done, the better it is for you. You don't want to wait until the morning of the 23rd of October and then wake up and then you want to start getting the data together, because then you're just going to mess your return up. File corrections as soon as possible. If you realize that the receiver of revenue made a mistake with the auto assessment, try and correct it as soon as possible. Stuff like, let's say for instance, if your employee made a mistake on an IP5, something like that can take a month or 2 months for them to correct. So if you wait until the 23rd of October and now you want to start finding corrections, then it's too late, then you're out the bus. So make sure that you get those things right as soon as possible. Next thing that's really important is don't spend the money if you suspect SARS made a mistake. Because, let's say for instance, the receiver of revenue makes a mistake, instead of saying, or not the receiver, let's say for instance, your employer made a mistake, instead of you earning 500,000 Rand for the year, now they say you only earned 100,000 Rand and they over deducted tax and they pay that money out into your account. As soon as the correction is fine, you need to pay the money back to the receiver of revenue. So now if you spend the money, it's gone. Now you're going to have to ask your mom or somebody to give you money to pay the receiver of revenue back. So if you suspect something was not right in your return, put that money aside just for in case you need to pay something back to the receiver of revenue, that you've got that money available. That's really, really important as well. Yeah, so I think those are just my pointers and my tips for the 2023 tax season. If you guys have any questions, feel free to pop it in the comment section of the video below. And just once again, if you're looking for an accountant or a tax consultant to help you with your tax returns, please go check out our website, saaccountingnetwork.co.za. We've got a list of many different tax consultants all over South Africa that can assist you with your tax return. Thanks for watching. See you guys for the next video.